Hi, and welcome to the Heron Financial Podcast. My name's Matt. I'm one of the founders of Heron Financial. In this series, we want to try and help you understand the big questions when it comes to applying for a mortgage and help you get mortgage ready. We really believe in accessibility and educating our clients. So hopefully, with the help of some experts, we're going to help you understand those big questions. We're going to start today by talking about valuations, and I'm joined by Josh, one of our senior mortgage advisors, and Rachel, one of our case progression managers. Thankfully, they're going to answer the questions I asked them this time around. So we hope that we'll get some really good, interesting content for you all. So Josh, let's start with you. Valuations. How do they actually work and what are they all about?
Valuations are a really important process to any mortgage journey. I mean, the design of a valuation is for a lender to instruct a third party to go and assess the property. The main aim is to determine its suitability for lending against, but also to determine its value for the property. And this is typically compared against like market value. Okay.
And it has to happen, right? Every time?
Yeah, there will always have to be a valuation done on a mortgage. Now, typically sometimes it could be as simple as a desktop valuation. Sometimes it might be more physical valuation, but we'll never know that until we get to that stage and we get told by the lender what would be happening with the valuation.
If I'm a layman, what's a desktop valuation and what's a physical valuation? So what does that mean?
A desktop valuation is as simple as somebody at a computer looking at the property on elements like Rightmove and Zoopla and seeing the comparable properties around it. So they don't actually need to leave the office to go and kind of inspect the property. Okay. A physical is more boots on the ground, someone in the property having a little look around it and making sure that it's all suitable.
So if a property's had quite a bit of work done to it, it's probably in your interests to go and have a physical valuation done, right?
If you've done renovations on the property and you believe it's massively increased in value, you will always want to try and get a physical value done because the historic data won't be accurate.
Okay. All right. And why is it that new builds, at least reputationally, have had a few challenges on valuations? Why does that happen? Well, is it the case, first and foremost?
It can be the case with new builds, but I think the hardest aspect with valuing a new build is you're trying to value a property that is almost half built. Yeah. So what they will do during a new build process is look at the plans for the property, and they'll also go to either that development or maybe a local, like another development by the same builder, which has that property already built. So they get an understanding of what that intention of that property will look like upon completion.
Yeah, okay. And Rach, we're recording this in 2025. Mm-hmm. What month is it? It's November.
November.
I get lost on my dates. Is this common? Is this happening a lot right now? Are you experiencing it?
Yeah, it can. It really does just vary. I would say if we did 10, maybe one might come back lower.
Okay.
Obviously, sometimes it can affect the mortgage itself, like the loan to value and things like that. Sometimes it doesn't. So it's just kind of taking it as it comes. We also do feedback to the building site as well, just to let them know.
Okay.
So yeah.
And why is that? Is that because if we come back to what Josh was saying before, there are less comparables potentially? Is it worth just touching on that a little bit to explain what that means?
So the valuer themselves will have a look at like the plans for the build.
Yeah.
So the site plans, like what the images might look like, all the CGI images that you would look at if you were to go to the building site and see them all for yourself.
Yeah.
So they obviously compare them against what's in the area, what's the pricing, all the kind of transport links and things like that. So it is just one person's opinion, but it can make a big difference.
And I think the challenge, certainly from what I've seen over the years of this, is that when you do have a new development, it often is a bit more expensive than the properties that are typically in that area, right? And I think sometimes you do find that the valuer doesn't want to stick their neck out. Do you guys feel that way as well? Josh, do you see that with new build a little bit?
Yeah, definitely. I mean, sometimes the reason for a price increase is sometimes because you are buying it brand new. Nobody's lived in the property before. Yeah. I mean, one of the benefits as well with it is you're going to be getting 9 times out of 10 a green property as well. So there are a lot of benefits, but obviously the benefits will come with an increase in the price for it there.
Yeah, and I think that's a good point. It's worth just kind of pausing on that a little bit. You know, we have seen, I think, a bit of a shift, haven't we, in terms of valuers understanding these energy efficient properties and the fact that they're possibly going to be worth a little bit more in the future. Is that, you guys notice that? Is that something that's coming through a little bit more?
Yeah, definitely. I think the biggest thing is, I think Nationwide historically came out and stated to us that they are starting to value green properties typically higher now and that's all just based on the EPC. So if your EPC is higher, it will be worth more than a lower EPC property. So it is starting to reflect in the market now. Yeah,
it's a good point. There was an index from Nationwide spot on that basically suggested that there was a small increase from some of the data that they'd found, and we're seeing lenders push that a little bit, aren't we, in terms of understanding that if a property is more energy efficient, there might be a little bit more value there. So from a valuations perspective, hopefully we start to see that turn. Fingers crossed. What does it mean for a mortgage offer? We just step back again and talk about the valuation in sort of detail. If it doesn't come back at the level, what does that mean for somebody's mortgage?
So there's a couple of things. I mean, the first thing is we will understand why it hasn't come back at that level. I mean, lenders will either just believe its value lower. Sometimes they might believe there might be a retention, which means that they might believe it to get to that value, but works need to be done first. Okay. Or sometimes they just want to lend against the property. But I think the main aspect is understanding what's happened with the value to then approach it in different scenarios. I think if it does come back just slightly lower, it could just be a sense that we might just need to tweak the mortgage, or the mortgage might still be able to work because it's all based on the loan to value. So it just depends on the numbers for each case.
But it is important, right? If it doesn't come back at the level that you want it to, it's not just a case of moving forward rates. How did people normally react?
People get quite scared.
Okay.
They automatically think, why am I paying this amount for the property where the bank's saying that it's not worth that much? Especially on remortgages as well, when people think their property's gone up significantly in value and then we turn around and say, actually, no, it hasn't. Obviously, it's a little bit disheartening. But I think the best thing to do is just kind of remain calm about the situation. What I tell people is that this is the bank's opinion, and this is what they want to lend you against the property. If you were to go and sell this on the market tomorrow, there's nothing to say that you wouldn't get more.
Okay.
But in this scenario, this is what we work off. And people tend to understand it better that way when it's kind of, we've got these options in front of us. Which one is the best one for you that we can deal with it, rather than just being in a panic about everything.
Because if you're a first-time buyer and you've not been through it before, it can feel a bit scary, can't it? And it might feel like the natural instinct is just say, "Ooh, should I buy this?" Do you get that question? Do people ask you that? I bet they do, right?
Definitely. People will tend to say as well, like, I'm curious to see what the valuation comes back at because I want to know if the property is worth what I'm paying for it. Well, it's just a surface level valuation that the banks do anyway. But it does, obviously, it can sway people's opinions and minds and things like that. So it is very important.
I mean, I've again seen it many times over the years where if somebody's maybe already a little bit on the fence about buying the place, this can be the thing that potentially tips them towards not buying it, right? Because it's just that little knock of confidence. And you mentioned it earlier, even though it is effectively one person's opinion, it can sway things quite a lot. Josh, you talked a little bit there about what options you've got if you still want to move forward. Can we delve into those a little bit? So, switching lender, increasing your deposit, having another valuation done. Just walk through what some of those things might be in practice, assuming I've never done this before.
So typically the most common approach I would do is the changing lender approach. The reason for that is all lenders will use a different panel of surveys. So lender A might use one valuer, lender B might use a completely different valuer. And obviously, like we talked about previously, it's valuer's opinion. So one person might have a completely different opinion to another. So I think the first key step is maybe trying to get a second opinion on the valuation, going to a different lender, trying that approach. Sometimes that will work and that valuer completely agrees with us. Sometimes we might come back to the same value we had before.
So, sorry, just to stop you there. So effectively what you're saying is you start again with another lender. So you're basically applying for another mortgage with a different bank. That valuer then goes out. They potentially have a different view to the first valuer, and then it's fine. How does that work?
It's merely the sense, once again, valuations are just almost opinion. That one person might go to it and just think, actually, we think it's slightly less, but somebody else could go to it and say, no, it is completely what it is worth. But it's difficult because we won't know what we'll get to until we get to that valuation stage. So it's difficult trying to place a mortgage with the right lender regarding the valuation, because we don't know how they're going to come back. And that's one of the hardest things that us mortgage brokers are able to actually control is the valuations.
Yeah. And is that quite common? Do you see that where you literally just try again and it's fine?
Yes.
Yes.
That literally happened to me the other day.
Really?
One bank valued it at 290. The other one, we tried a new lender, valued it at 330, which is what we were after.
Okay. So step one is we don't panic.
Yeah.
All right. Step two is potentially try again and it's fine.
Mm-hmm.
Yeah.
Okay. What about if I didn't want to try again with a different lender, Josh? What are my options then potentially? If we set aside challenge it, because I'm going to come back to you on that, Rach. If I want to stay with the lender and look at my deposit, etc., how does that work? What can I do there?
If you were buying a property, like Rachel said, for example, at 330 and it came back at 290 as a valuation, you can still buy it for the 330,000.
Okay.
But what you've got to do is, depending on the deposit, you either need to look at a higher loan to value product, which means that you could be looking at a potential increase in the interest rate, or increasing the deposit to ensure that you're still looking at the same loan to value. So there are still routes forward with mortgage, but it's just working the numbers and seeing which ones work obviously best for the clients. Okay,
so I can potentially just put more of my own money in, right? If I really believe in it.
Yeah, because if you buy, even though the value came back at like 290 in that instance, it's not to say that if you sold it again in the future, you still might get the 330 you put back into it. So it is potentially still valued at what you're buying it for, but it's just that person's opinion, it's just slightly lower. So to move forward with that lender and that particular interest rate is slightly difficult.
Okay, fine. And if I did want to challenge it, what does that process look like? There was a deep intake of breath there.
It's out of every single valuation that I've challenged, I think I've had 2 overturned.
Wow.
Which is
so it's a long shot.
Yeah.
Okay.
You really need to have a strong comparable properties in the area that have sold.
Okay.
It's like within a mile within the last 6 months, and you've got to have the evidence available to you.
So what does that physically, like, what does that look like? What do you do?
So what we try and do is kind of look at on Rightmove, see properties that are sold in the area and things like that. But it's sometimes not enough. They need to know kind of square footage, the estate agent who sold it. It's really hard to get the information. It's quite dependent on the client to go out and do a lot of research themselves.
Yeah.
That tends to be the best outcome. Or you can challenge it as well. Say if the valuer has made a mistake somewhere, then they will have a look at it again and pick it back up.
Fine. So it's possible, but tricky.
Very unlikely.
Okay.
If it does kind of get increased in value, it's usually not by very much.
Right.
But one thing I learned recently was that the valuers, if they were to get it incorrect, they can get really told off for it.
Right,
They can like lose their job and everything.
Wow.
So I think that's why most of the time they try not to even let it get to that stage.
So that challenge is really tricky.
Yeah, unless there's actual physical evidence of grounds in front of them that they can rely on.
I mean, that's the hardest thing with challenging evaluation is you are trying to tell somebody they are wrong. And obviously, and human nature is they won't want to admit they're wrong. Because I mean, like you said, I mean, they're going to get in trouble for it. So if you're giving all them evidence, although we would agree with it, you're trying to convince somebody that they're wrong. And it's the hardest thing. That's why it's very difficult to get them overturned.
So if I'm in that position now, let's say I'm watching this or listening to this and I've just experienced this down valuation and I want to challenge it, what do I need? You mentioned a few of them, but can you just list them so that...
as much information as possible about the property that you're buying and properties in the area. So specifically ones that have sold close to you, how much they've sold for, who has sold them, and how they are either similar or different. So literally as much as information as you possibly can get. But what I always say is it's always worth a go.
Yeah. So make friends with an estate agent.
Yeah.
Okay, fine.
Even going in and asking them questions, like they're more than willing to help you. I've spoke to some estate agents myself in the areas and tried to help people get comparable properties. And they do want to help because they like to share their knowledge. So it's always worth a go. You never know what could come back with.
Great. And when is walking away the right thing? You must have this conversation a lot, Josh, from an advice point of view where maybe you've tried it a couple of times. How does that pan out? When do you know it's right to stop?
I think that's the biggest thing is when we've tried it a couple of times and we're constantly getting either the same value or sometimes I've tried it a second time and it's returned even lower than the first one. So I think it's having that open conversation with the client saying, we're getting the valuations, they're returning lower than what you're purchasing it for. Are they potentially aware that they're buying it over market value? Because that's one thing to be aware of as well, is that clients can buy over value. I mean, it might be more, it's a dream property and they're prepared to pay more for it because they never want to leave it. Or it's the ideal location for like school or like next to work. So sometimes clients will buy over market value, but it's understanding if they're aware of that and if they're prepared to do it. But if they're not, then sometimes it is a situation where they may just walk away because it's not what it's returning us.
Yeah. So if you've had a couple of attempts and it's not quite at the level you want, you might want to rethink whether this is the right property potentially.
That's the main thing for it as well. I mean, if it's a dream property for yourself, if it's a dream home and everything like that, then you may be prepared to go with the market for it. But obviously, if it's not, and if it's like your first home as an example, you may want to be buying more of an investment that if it is over market, it'll take a long time for it to return.
Okay. Well, we've touched on a few of the ways that you guys help, and you are very helpful with this, but how would you summarize that? So somebody's mortgage application's running well, everything's been agreed, the valuation happens, we then get that down valuation, effectively not valuing the property at the level. Just summarize in a nutshell, albeit we've touched on it quite a bit. What is the process? How does that work? You've both got different inputs there.
I mean, I like what you said. I mean, I think the first thing is staying calm. I think we've been in the industry for a long time, so I think it's understanding that we've seen all of the situations. We kind of know all of the different avenues that it's going to play out. So I think the main thing is to stay calm and just jump on the phone to us.
Yeah.
Understand the options. Do we try a different lender? Do we potentially change the deposit amount? Is that an option? Do we go for a different product? It's understanding all of the options to then determine which one is obviously best for yourself.
Yeah. Okay. Rach, anything to add on that?
If you do want to appeal it, obviously we can. The best thing that we can do is just kind of sit down, remain calm, sit down, have a look at the options. If you want to kind of, if it was a purchase, discuss if you would be able to renegotiate or appeal it or whatever, or if it's a remortgage, how it affects your loan to value, things like that. It's just always good to get as much information as you can from whoever your advisor is, just to understand your options fully and kind of go for what the best thing is.
And final question, thank you for that one. There is a lot of emotion, right? So how do you avoid overstretching financially? Josh, you talked about the dream property a couple of times there. How do we avoid this situation where the emotional element maybe clouds some of those financial decisions? Do you have any advice?
I think it's the biggest one is understanding the budget behind everything, because if it's overstretching yourself, we need to understand what that refers to. I mean, are we referring to the monthly payments for the client? So in which case we'll sit down with the client, go through their budget with them, make sure that any payments we're putting forward are obviously sustainable for them or obviously for the family. Obviously, if it's like the property's undervalued compared to maybe what they're buying it at. So determining the deposit levels and if those are achievable for them.
Yep. Rach, anything you would add?
I think it's kind of all about your life stage and where you're at in life and what's important to you at the moment. So like what makes it a dream house? Is it the size, the location? Is there anywhere else that you could consider that might, tick these boxes but be slightly different?
Yeah.
Just those little things to consider, that if something doesn't happen, maybe it's not the right thing, is always something to maybe shift your focus to a little bit.
Yeah, because it is emotional, isn't it?
Yeah.
And you experience that.
Yes.
You get attached very quickly to to that property that you're really wanting to buy, but it's not to say that the next property out there isn't the right one for yourself or maybe the one after that. So there will always be options for yourself. It's just determining what's best for yourself.
Amazing. Thank you both. That was very helpful. Thank you everybody for watching and listening. We really appreciate you taking the time. Hopefully it was useful for you. Hopefully you found some interesting information to help you. If you are in this situation, we can absolutely help. I've been Matt. This is Josh. This is Rachel. Thanks for watching the Heron Financial Podcast. We'll see you next time.